right, if you're looking to invest, there are some things you should know beforehand. And here to tell us some do's and don'ts of investing is Brent Wilsey of Wilsey Asset Management. Good morning, Brent.
Good morning, Ginger.
Okay, this is a sensitive subject because we're talking about people's money.
Yes.
So it's as important to know where to put it as opposed to where not to put it. And that's what you're going to be talking about a little bit today, right?
Yes. A few weeks ago, we talked about what I was excited about, where good places to go. But I want to tell people where not to go and what worries me now going forward, because it's very important to avoid some bad investments.
Okay, let's talk about it. What is concerning you? What has your attention right now?
Well, what has my attention now is rising interest rates. The economy is doing very well. Well, what that means, that rates going up, the Fed just met, they probably do like 3, maybe 4 increases this year. You want to be careful of interest-sensitive investments, so you want to be careful of that. We all know now, right in the front of the news media is trade wars. Oh my gosh, this is terrible and so forth. As an investor, what should you avoid to make sure you're not caught in the middle here? And then lastly would be inflation, because as the economy does well, inflation goes up, and that can hurt some investments.
Okay, so when you're saying interest rates, so a home, obviously that's one of our big assets that we watch the interest rates. Are you saying don't refinance now, or do it now because they're going up and you don't want to pay those extra numbers?
That's a great question, because again, if you are at a high interest rate, which I believe most people refinance, but if you have not, your clock is ticking. You better refinance quickly, because by the end of the year, rates will be higher than they are now. So don't delay. Call that mortgage broker and get that done.
Yeah, how fast will they go up? I mean, we're talking about like 1/4% by the end of the year. Are you thinking a bigger jump than that?
I think by the end of the year, they could be up at least 1/2 to 3/4 by the end of the year.
And then do you think there's going to be a correction on that, or are they just going to be climbing and climbing as the bond market responds?
I think they'll keep climbing. So I think in 2019, we'll see more interest rate climbs as well. So, I mean, we'll see probably in 2019, another 1/2 to 3/4 point rise on interest rates.
Elaborate a little bit more on the trade war, because you're saying don't invest in those items that are going to have the tariffs. Is that what you're saying?
You want to know, if you're investing, what businesses or stocks or equities, as we call them, which ones are going to be hurt the most. So what you want to look at is what companies have a lot of sales in China. Got to know that.
Because we buy more from them, or they buy more from us than we buy from them, correct?
Yeah, it's a huge difference. We have a deficit with China of about $375 billion.
Wow.
So with their, we're going to do this to you and so forth, we don't care really that much, because again, we buy so much of their products.
Right, so the threats could really make a big difference in your portfolio, so pay attention to it?
Well, pay attention. The threats are actually, for the right companies, it's a buying opportunity, because it's not going to affect them. But if you don't know what you're doing and you're investing in the wrong companies, the wrong funds and so forth, it could actually devastate your portfolio, because there will be businesses that will be hurt by the trade war.
Oh, without question. Okay, so what investments do we avoid here?
Well, I tell people, be careful of bonds, utilities, real estate investment trusts, because these are very interest rate sensitive. So as rates go up, the value of those go down. So stay away from your bonds, stay away from your utilities, stay away from your real estate investment trusts, because they're going to feel the pinch of rising interest rates.
That's really interesting, because you typically would think bonds are kind of like that safety. I know my mom, who's not very aggressive with her portfolio at all. She's always, bond, because they're safe.
Right.
But you're saying not so much.
They are safe as a long-term investment goes, but they do have declines in the value. And I remember the '87, one thing great about being older is I remember the '87 bond market crash, and people like your mom said, oh my gosh, I didn't think I could lose this much money on a bond. We're going to have a similar thing going forward over the next 2 to 3 years. So bond investors, I tell them that is not the place to be.
Okay, what about stock companies with large foreign sales? You're saying don't invest there?
Yeah, that's what I was talking about with the trade war with China. I mean, be careful. Like Boeing has about 13% of the revenue comes from China. 3M. Caterpillar. These are companies that have a lot of business to deal with China, and China could say, sorry, we're not going to buy that now. It's not going to hurt the overall economy, but these individual companies, it is going to hurt those.
Okay, and airlines, cruise lines, don't invest?
Well, be careful, because what we're also going to see is rising energy costs. The price of oil is going up. Actually, Brent crude, which is a worldwide indicator of oil, surpassed $70 a barrel. Well, that's going to hurt your airlines and your cruise lines, because a big expense for them is petroleum,
right.
is energy.
And so they're going to transfer that back to the consumer, which means possibly people won't be taking so many cruises or flights.
Yes, and there's the inflation factor, and also too, as you said, people will say, well, wait a minute, I can't, the ticket was $1,000, now it's $1,100, maybe we'll drive somewhere else. Yeah.
Okay, and social media.
Social media right in front right now with Facebook
Yeah.
and all things going on with that. And they're kind of in the midst of, are they an advertising company? Are they a media company? They're now coming out, before they were a media company, now it's not benefiting them. They're saying they're an advertising company. They don't want the regulations that we go through on regular media. And they're trying to get away from that, so that is actually hurting them, because now, well, what are they?
Right.
So, again, a great company, that Facebook, everybody knows Facebook, but you got to be careful what you pay for something. If you pay too much for any company, business, stock, or whatever, you're going to get burnt, because it will go down, not up.
And that one's been all over the place. I remember when it first came out, you know, everybody wanted to jump on that Facebook bandwagon, and then they seemed to bottom out, and now they've leveled off, but you're saying potentially not a good investment going forward.
It's just too expensive. And again, they've done a great job over the years. They've really turned things around. There was a time that I didn't think they were going to make it because of
Yeah,
the change from computers to mobile media. And they did a great job with that. But now, with the regulations they could have, it costs money, it's expensive, and it's going to hurt them. They can't do some of the things that they want to do. And it's not just them, it's also, you know, Google's going to have a problem. A lot of other companies in social media, and even with the cloud, so to speak, could have problems as well. So very interesting times right now. You've got to be careful as the investor.
Well, you've warned us, so we appreciate it. Great information this morning, Brian. I appreciate it.
Thank you very much.
For my $20 that I can invest later today. Okay.